Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. February's inflation showed a declining trend, rising by 2.8% year-on-year and 0.3% month-on-month, lower than January's growth of 3% year-on-year and 0.5% month-on-month. The advanced retail sales data for February will be released this week and is expected to grow by 0.6% month-on-month, marking a significant improvement following January's decline of 0.9% month-on-month. The Fed will hold a meeting this week, and the market predicts that the Fed will start cutting rates around June 2025. Europe Zone. German lawmakers have agreed to change the country's strict debt rules, allowing more spending on defense and infrastructure. This decision comes as Europe faces growing security concerns and aims to strengthen its defense. Indonesia Zone. Consumer confidence in February remained in the optimistic phase, recorded above the 100 level at 126.4, though slightly lower than January's 127.2. The February trade balance will be released this week, with the market predicting a trade surplus. However, the actual surplus was recorded at $2,400 million, a decline from January's $3,428 million. The weaker surplus was likely due to a 1.35% year-on-year increase in imports in February. Bank Indonesia will hold a meeting this week. Despite February entering a deflationary phase, the market expects no rate cut, as Bank Indonesia is likely to prioritize stabilizing the US dollar-Indonesian rupiah exchange rate. Market view. The Jakarta Composite Index JCI declined by 1.81% week-on-week, closing at 6,516. Globally, market sentiment should be positive, as China is taking serious steps to address its economic growth challenges, and Germany is prioritizing defense and infrastructure spending. Domestically, aside from February's trade balance remaining in surplus, banks are set to announce their dividend policies this week, which may provide additional positive sentiment for the JCI. Foreign investors recorded a net sale of 3.69 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 26.04 trillion Indonesian rupiah. The three weakest performing sectors were basic materials, healthcare, and properties and real estate, which declined by -6.49%, -3.99%, and -3.81% respectively on a weekly basis. On March 14, 2025, the yield on the 5-year benchmark government bond FR0104 flattened at 6.69%, while the yield on the 10-year benchmark FR0103 increased to 6.96%. The yield on the 15-year benchmark FR0106 remained unchanged at 6.99%, and the yield on the 20-year benchmark FR0107 also flattened to 7.04%. Meanwhile, the yield on a 10-year Indon bond Indon 35 remained stable at 5.21%, and the 10-year U.S. Treasury yield held steady at 4.31% compared to their levels on March 7, 2025, which were 5.17% and 4.32% respectively. Indonesia's risk premium as reflected by the 5-year CDS increased to 82.97 basis points. Additionally, the rupiah weakened by -0.34% week-on-week, closing at 16,346 Indonesian rupiah. As of March 13, 2025, foreign ownership in the government bond market stood at 894.99 trillion Indonesian rupiah, 14.41% of the total outstanding, down from 897.99 trillion Indonesian rupiah, 14.44% of the total outstanding on March 7, 2025. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, after lowering the benchmark interest rate by 100 basis points in 2024. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.